Good day, fellow investors. Let me finish the Facebook video saga that we have started. I've made a few videos on Facebook how I'm turning negative from a risk-reward perspective, and here I want to clear some points. Because there were many comments about Facebook, how I'm wrong on advertisement is so strong, so even without metaverse, they will do good on advertisement, high cash flows, buybacks. Just 2 quarters are nothing compared to the long-term growth, and the fact that the 2 quarters coming after the great quarters of COVID, Facebook, great business, great employees, testing constantly, seeing what works, and it has a moat, 3 billion users, even with the slowdown, it is great. Now let me tell you something, I totally agree on that, and there is really a chance that Facebook will grow 10 to 15% over the next years per year, and there is a big chance, actually it's most likely that it will do great. And if you go to our valuation table that you can download for free in the description below, we go to Facebook, then I have put earnings here of 11 conservatively, but maybe earnings will stay stable and be 15. And then if I put growth rate, let's say of 15% for the next 15 years, 5 years, and then 10% discount rate, expecting a 10% discount rate, with a terminal multiple of 20, then the intrinsic value now is 340. Compare that to the stock price, it should double, it should be an easy double in a year and return back to the previous levels. And then over the long term, in 10 years, it should be $800 and give you 5x. So that, yes, it is very, very possible. If they then start growing the metaverse faster, and then they grow 20% earnings in the future, then you get to your intrinsic value of 500. If the terminal multiple changes, you have a price now of 600 for a 4x there. This can really happen. And let me now give you the situation that I think Facebook is in now. From an investing perspective, I would say 75% chance of Facebook doing really well. Stock price 366 in a few years, easy to X. 15% chance it remains around these levels, 10% there are real structural issues with the usage, and then it really declines. So this is the risk reward. And if things are great, at least the double is minimal for Facebook. But if things are bad, then the stock price should go lower, 194, stay around current levels, and 78 if there are structural issues. The main thing for me is that, and then if I sum things around, it is, yes, undervalued from a risk-reward investing perspective. That's a given, because this is the number that we get from the valuation. But I think that I cannot invest in Facebook because I'm much more conservative. I cannot put significant amounts of my money, of my wealth into Facebook because of the risk of this. Because this is what I sense that can happen. Even if the low probability of it happening, I cannot risk my money to put, let's say, 25% of my stock market exposure into. This is the risk I cannot take, even if the risk reward is still positive. So it's just that I sense something that can happen, therefore I can't risk my money. That's value investing, that's conservative. I hope you appreciate my risk and reward, and just giving a little bell there. And I really hope that my videos on Facebook, the negative ones, age like milk, which is the most common comment, this age like milk, on something that didn't develop, or the risk or the reward as I predominantly said it. That's something that makes me happy. I don't want anyone to lose money. All the stocks just go up, up, and up. But I'm just here to discuss the risk and reward so that you can see how it fits your portfolio and your portfolio exposure. This finishes my Facebook saga. We'll watch it over time and see how it develops. Thanks for watching. Let me know in the comments what you think of the risk and reward, how it fits you, and I'll see you in the next video.